one of the most effective modern trading strategies profiting from fake breakouts. It is based on the term FOMO, which means fear of missing out. It is when trader is desperate to enter into the markets. When market goes up rapidly, he develops a temptation to buy. When market goes down rapidly, he develops a temptation to sell. And as soon as he sees even a little opportunity to enter, he enters into the trade. And when his desperate move fails, that is when our strategy comes into the action. Requirements of our trading strategy is very simple. It includes understanding of trading impulse and price action, strict risk control, and solid exit strategy. Trend impulse is basically a very strong move in a single direction, strong enough to attract many desperate buyers and sellers. Trend impulse should be very obvious. If you have to think twice whether it's strong or not, the chances are that it is not. The move in this chart marked in white is a very obvious example of strong impulse. Notice how it looks. Very green, very bullish, and very obvious. The zone marked in red is an example of poor impulse. Notice the confusion in direction. The next major part of our strategy is inside bar. It is a combination of two candles. The first candle of combination is contained completely within the range of first candle. Notice how the second green candle is contained within the high and low range of previous candle. In next example, the red candle is contained within the range of green candle. And even in the last one, where green candle is contained by the red candle. This pattern is not rare. You will easily find many inside bars in your charts. Now let's talk about the trading rules. First step is simple. Look for inside bar. Then check for clearly attractive uptrend impulse just before the inside bar. If it is present, then proceed with step 3. If it is not present, move on, because the strategy will not work. Like in this example, there is a clear uptrend impulse just before the spotted inside bar. Now once you spot this combination, look for a higher high and a higher low in immediately next candle. This is when the desperate traders will buy. Now wait for the breakout to fail. This breakout will fail when the low of inside bar will break. As soon as the low of inside bar is broken, enter into selling. For stop loss, use the high of false breakout bar and then let the profit run. For buying too, the first rule is same. Look for inside bar, then check for strong downtrend impulse just before the inside bar, and when you get this combination, wait for the lower high and lower low in immediately next candle, and then wait for this breakout to fail, which is above the high of inside bar. And as soon as the high of inside bar is broken, enter into buying. And stop loss is below the low of false breakout low. After entering, let profit run. For targets, trader may experiment with super trend with settings 3.1, 3.2 or 3.3, or with RSI with settings 14, and even Heikin-Ashi candles are very awesome for letting the profit run. While using this strategy, you have to make sure that the impulse should be very clear. The time frames below 1 hour may not be suitable for this strategy. We recommend daily or weekly time frame for this particular strategy. And lastly, you may find many inside bars in your chart, but the combination of a very strong impulse with the inside bar is very rare. So do not force analysis into the charts. Only trade when the setup is very clear.